Good afternoon. This is Tom Aspray with the Viper Report. It's Friday, January 11th. Well, the new year's gotten off to a great start in the stock market, which after the last quarter of 2018 has helped relieve some of the pressure on investors. This chart shows the S&P 500, one of the most commonly followed market benchmarks, showing that it's had a really nice rally up to that 25.91 level where we're trading before the close on Friday. Though the sentiment has turned around quite a bit, as I'll discuss in a few minutes, the last part of this rally has not been impressive in my opinion. You'll notice we have made it up to what's known as a 38% retracement level at 25.73, with the 50% level at 26.43. Now, why is this important? You can see all of this trading activity in October, November, and early December that occurred above 26.43. That means everyone who bought there is now at a loss. So when prices are going to get back to that level, if they do, there's going to be selling. This change in the market mood is evident in one of the most popular investment sentiment surveys conducted by the American Association of Individual Investors. You can see from this table that the week of December 13th, only 20.9% were bullish, 48.87% were bearish. Since then, the bullish percentage has risen to 38.46% this week, and now only 29.37% are bearish. This chart demonstrates this change in sentiment, 20.9% bullish net. Now we're back above that level, and 38.4% are bullish. That is the reason I have not been an aggressive buyer this week. In fact, I did some selling midweek. The other problem I see for the market right now is that after such a prolonged decline, 30 years of market experience tells me that we're not going to turn around on a dime. That means we're going to need some backing and filling. This makes the entry on new long positions especially important. Most investment losses, in my opinion, are based by either buying too high or selling too low. Below the bar chart, you see the advanced decline line, which is now positive on a short-term basis, but it does not yet suggest the market has made a significant low. Below that, you'll see that the volume was very high in that massive pre-Christmas sell-off. The volume has been declining as prices have moved higher. This is an indication that fewer buyers have been pushing the market higher. That's also not a strong technical reading and does make the market vulnerable to a pullback as we enter earnings seasons next week. As I commented in Thursday's Viper ETF report, the rally in many of the markets, this is the Dow Jones Industrial, the S&P 500, and the financial sector, have the same sort of ABC pattern, which is typically seen in a rebound within a downtrend, and also suggests that the rally is likely to fail. Of course, many of the big banks have earnings on Tuesday, and that'll be a real test of how the earnings season may go. My analysis of crude oil on January 3rd, Thursday, looked like a bottom was in place. We recommended the United States Oil Fund at 9.78. We sold that position Wednesday at 10.97 for a little over a 12% profit in just a few days. Each Viper ETF and Hot Stocks report include this front page table that gives you the readings of the major averages, support resistance levels, as well as the readings of the advanced decline lines. I have not had an update in over a week as I started a new year off with a nasty cold, which really makes me miss the days I lived in Hawaii and my several visits to the Kahala Hilton, which is where the Sony Open has currently been played. It's a very luxurious and expensive place. In addition to this porpoise pond, they have a great restaurant and wonderful accommodations. Successful investing and investing wisely allows one to afford this sort of accommodations, and I'm wishing you the best for 2019. If you're interested in specific investment advice, whether in ETFs or stocks, I hope you'll sign up for one of our premium services. Go to viperreport.com. You can click on the link for the Viper ETF report or the Viper Hot Stocks report. Each is only $34.95 a month, includes 6 trading lessons, and updates twice a week. I think it'll help you be well prepared for 2019. Hope you have a great weekend. Thank you.